Hello everyone and welcome back. In today's video, we discuss everything to do with the stock, crypto and commodities markets right now, including the key levels that you need to be watching over the next 24 hours to the next few weeks. The Federal Reserve is coming out and they're saying we have an inflation problem. We obviously know they're going to be raising rates, but the markets are still going up and many people are scratching their heads. Remember the great quote, markets can stay irrational longer than you can remain solvent. So what's going on with this market and where do we expect it to start to crack? Take a look right now because today we've got a great video for you. See you soon. So welcome back to our daily show here where we recap the markets for the close 22nd of March 2022. Remember, if you like stocks, cryptos or commodities, smash that subscribe button and give us a like if you do enjoy our content. So faster is better, said the Fed's Bullard. He believes that we can get a rates up to 3% this year. Is the man mad? I don't know. There are other people in the Fed as well saying 2.5% is very possible. If this does happen, what do we actually think is going to happen to the stock market? There's a point the stocks can handle and a point they can't. So it's going to be a very interesting discussion that we have to look at throughout this year. We've said it several times, 2022 is the year of the trader. And in today's video, we'll cover off why this is and really give you some solid stats and data backing some of the things that we're going to be talking about here. Tesla stocks mooned. They went up to almost $1,000. They broke that key 945 and it was probably one of the best trades of the day. Tesla just went 945 straight up to just under $1,000. And this was off the back of Tesla cutting the ribbon. So Elon Musk cutting the ribbon on the Berlin Gigafactory, and this will now produce potentially 500,000 vehicles per year. Obviously, it's a positive thing for Tesla, but we did know it was happening. It's just really a big excuse to allow the market to really start to rally through those levels. You know, you love a good news story, don't you? Let's have a look at the broad market. What was doing well? Well, it was technology. Technology seems to be the story of the last week. The gains have been swift, they've been exceptional, and almost every one of the tech stocks was doing very well. If we think about the morning, we were actually live streaming the morning, and I'll show you where things changed. We saw a rally initially on the open. We then saw a dump and something happened here that you don't always see, but I'll show you it, and we spotted it live, and of course it was the beginning of a big rally. Shout out as well to our public Discord and Discord communities in general. They were sharing this with the community. So make sure you click on the link down below, jump into the Discord. There's over 7,000 people in there, a great community of people sharing good TA and good ideas about the markets. So it rallied and then it really just kind of sat for the rest of the day. It was an aggressive rally too. That was very strong and it seemed to go against what we were discussing yesterday. We've been hoping, and remember hoping is one thing, but actually seeing it for a pullback. And you will get a pullback in this rally. Eventually you do. That's just the way markets are. However, when you're talking about day trading and scalping, you've obviously just got stop losses, entries, and take profits. So the idea is that if you see a breakout and it looks real and you see the right signs, you've basically got to take it. We broke the resistance and now we move into a blend that we'll talk about later when we look at the index. Let's talk about what's going on with the broad market in terms of the sectors. It was all about technology. It was all about consumer discretionary and risk on. That was really the day. But I want to talk now about what we believe could be happening here in March and April. Remember, markets can stay irrational longer than you can remain solvent. It might be very clear that the economy is sick. However, that doesn't stop the markets from going up for a period to suck in as many people into this rally as possible. March into April, that tends to be a very strong period of time for technology, consumer discretionary, and sometimes even biotech and healthcare. And that's what's occurring right now. We've got this very strong pickup. There's something that happens on the back of April, though, that's pretty important. If you know what it is, type it in the comments right now. Pause the video and let us see if you understand what's coming at the back of April that might be a little bit of a warning. 4-day breadth, we reported on this, was very strong, showing that this market rally is good. And as we mentioned, it is not the time to try to short the markets right now. We've said that ever since this rally began last week. The reason we saw something happen that fundamentally changed the markets. They broke TA resistances, and that's why this rally has been quite aggressive. The TA has actually shown us the direction. Regardless of our opinions on the market, it doesn't change. We have to trade the TA. Trade the price action is 2022. One of the things we've talked about a lot is relative outperformance of stock splits. Obviously, Amazon and Google, we'll take a look at some of those a little bit later. They've been doing very well. Why? Because they've also got the power of the stock split coming along with them. They're not maybe the best stock in the market right now, but they're one of the best big stocks that's been moving. And Google was something we highlighted on our weekend video as a very exceptional kind of level for it. Let's talk now about what we're mirroring and how we're coming to the conclusion that this could be a false rally, even though it might last for a little while here. Well, look at this. 2008 NASDAQ versus 2022. Sell off at the beginning of the year, rally, and then obviously we know what happened next. Now, I'm not saying it's going down here. We don't know that yet, but certainly it seems like whatever rally occurs here will probably be met by some type of seller demand. Why? Because we're also in a midterm election year, and this has been the story of 2022. We knew it was a trader's year because midterms tend to have two large pullbacks in them. And of course, what happens with midterms? First year midterms tend to be worse. Second year of new Dem Pres tends to be really bad, and also Democratic Pres midterms tend to be really bad as well. All of these tend to sell off at the exact same period of time. When is that? The end of April into the start of May. Now, many of you have heard of sell in May and go away. The stat doesn't hold up. Actually, if you look at sell in May and go away, it's not really a very strong thing. But I have a feeling that that might be the way it goes. So let's get into the technical analysis and we'll come back to why that is. Remember, if you think you know why, put it in the comments. I'd love to hear from the community on if you know why it could potentially sell off at that period and what big news is going to be coming up. So let's talk about the US 2-year versus 10-year. It continues to hike. It continues to get closer to inversion. So the VIX, while the VIX has continued to drop, and of course it's been in decline mode, it's getting closer to that all-important 20. Whenever the VIX goes near the 20, usually we do see some bounce in volatility. That could time very nicely with some areas in the market as well. But remember, currently selling the market is quite difficult. This rally could be sustained for a little bit longer. If you're looking at the bonds, obviously we bought LQD in. I use a little bit of a different bond indicator to this, but it's based on LQD and some other metrics. And the way that it's looking right now, it's still actually saying bullish. Now, I know from this perspective, you'd say, but Tom, that's not bullish. It hit the 20 and it sold off. Yeah, I'm just showing you that the way that bond markets trade is very important and you need to understand what they're doing. Look, the bond traders are telling you the market's sick, but the actual current bond movement in relation to other things is still actually on the upside. So yes, bonds are down. They held a little bit better here in terms of corps, and gov bonds, they continue to decline. So remember, gov bonds are not showing us much health in the market. People are dumping that and going into risk on assets, at least at this stage. That will eventually flick, as we know, once eventually all of this stuff changes. Let's get into the market here for gold and other commodities. We'll talk about gold first. It's bottoming off on this little area down here. So that's around that kind of 1910, 1920 area. You'll notice here on the 2-hour, little bullish hammer. Maybe it tries to have a little relief rally at this point, but it's still stuck very much. And the thing with gold that a lot of people don't understand is that it's good to trade around 10% of the time. 90% of the time it's not good, and about 1 to 2% of the time it's amazing to trade. And that's like a lot of assets, really. Sometimes you have an edge, sometimes you don't. At this stage, it's just really finding a little bit of support. And if you think about it on the daily, you're sitting in a zone where there's a little bit of wick buying. 1950 plus, that will look a lot stronger. Let's move over to oil. So oil hit our first target, 50% fib of the pullback. That being said, I think there could be a little bit more here in oil. So I'm thinking oil could get to a 61.8 to a 78.6 fib of the pull. That somewhere in here is where I expect oil to have some problems. So for this stage, if you look at it on the chart, it's currently holding a series of higher lows. It's looking to break through that 111 space. And if it does, we could be looking at a new peak here and moving into these Fibonacci retracements. Remember, when you have such a massive sell-off, such as 30%, the rally does tend to happen, but then after that, it can kind of weaken and stop itself. Let's move over to Tesla. So we've been talking about this for ages, 945. 945 was breached in the session during the open. Let's take a quick look at it on a 15-minute chart just to show how it reacted to this zone. So we saw the 940. We saw the 940, we get just above that 945, breach it again, and a lot of people were probably pretty excited about taking the position here. And what happened? Bam. All the way up, just under 1,000. Pretty good day trade there. And I certainly think it was very open for day traders to get some of this. About 5% from that point. Obviously, it was up 7.91 on the day. But depending on how you were taking it, if you were looking for that break of 945, which I would have been, that was pretty strong stuff. So 1,000 now is really a resistance. Will the market stop here? You don't really want to bet against it right now, but 1,000 is a big level. As you know, support, 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 support. You would think it's going to be a bit of a resistance area. A breach of 1,000 opens up the next level, which is going to be around 1,080. And at this stage, it looks to be right around that point of resistance that you're now waiting for more information. This is a day by day by day thing. If the market drops on Tesla, where are you going to find strong buying pressure? Now it comes back to that 945, 950. So I think, again, these levels, the great thing about understanding them and understanding flow is that when it breaks through here, it's highly likely to go here. Whether you use a volume profile or you use anything else, you could put anything on this chart and you would see that this was a huge gap available to you. Let's talk about some other big breakouts in the last session. Google was one of them. We've been talking about this. We got that daily on Monday, little bullish hammer. It broke through, nice rally through the session. And again, another good day trade. I actually think some of the best trades were on this day anyway, were actually in stocks, because there are some things going for things like Google and even Tesla. We had news from Tesla, which helps it along. We obviously had Google. The one good thing there was that we ended up having a stock split that's coming up. So people are very bullish on this and they're prepared to get involved in these rallies. Obviously a little bit of a triple bottom here. If you're looking for it to where it could go to, and this is why we say the markets might stay fairly irrational, we could go easily to the 3,000 here from Google. And if markets do pull back, what do we suddenly see? The very big potential of some bullish movement around where it broke through yesterday. So that's going to be something. ARKK also doing really well. We reported firstly on this that it was looking very bullish here, and everything really changed in the market on the 17th of March. You might say, oh, I should have seen it down here at the 15th. It was the 17th that really changed the game. We obviously have the 20 moving average here for ARK getting closed above. We then see the rallies coming through. And since then, you've had quite a nice rally. That was basically the time when we started to say, okay, hyper stocks are go. And if you started to look at hyper stocks, some of them have done amazingly well. You know, some of them, like something like Square, has done very, very phenomenally. Double bottom on the 17th, bam, there we go. Few days of big bullish pressure coming into the markets. Another one was XLY as well. If you look at sectors, all of a sudden, on that day, we broke through our downward trend. We broke our double bottom. This is what technical analysis helps us to do. All the way through this decline, we didn't see bullishness. All of a sudden, we saw the first signs of bullishness, and it means that it's very difficult to currently sell these rallies. That's why we've gone against selling the rally for now. Whenever you look at these markets, you've got to think, is it acting irrationally? Well, maybe you don't understand how markets possibly work. I mean, that can sometimes happen. Another thing is, if you're looking at it and you're saying, okay, should I be selling the rally? You've got to look at the price action. That's the psychology of the market. Whether you read, the tape or you're reading whatever, really the psychology is key, what you're looking at in terms of market conditions. And at this stage, it's still bullish for now. We haven't seen signs of any weakness coming through this market. And even when weakness is going to happen, you would think buyers are going to step in and look for it. So earlier before I said to the question of, do you know what's coming up at the end of April? And the answer is earnings. We tend to see weakness or strength around earnings periods. So here's an example, Amazon, obviously consumer discretionary here. The American consumer, a lot of people don't know the stats. It's pretty scary when you think about it. I'm not sure if it's 46% or whether it's even higher than this, but I think it's 46% plus of people in America have actually $0 in their bank account. That's pretty crazy. And then there's like another 20% that have like less than $1,000. It's pretty nuts statistics. Now, when you think about consumer discretionary, you think about inflation and all the problems that are there. Everybody would know that gas is too expensive, that we've obviously got this incredible cost that's going to be coming, especially to the American consumer, that may end up affecting the earnings. So if we're thinking about a rally here, Where could that rally come unstuck if markets are going to be irrational? It's very possible it happens at the back end of April into earnings. Now, this is just a hypothesis for now, but it tends to make sense. And if we start to see the signs of weakness in the market from a TA perspective, wouldn't you be saying, you know what? Geez, okay, I get this. This actually could be a risky time. Possibly it's worthwhile placing hedges or looking at my system and seeing whether I can reassess these market conditions. IWM, again, it hasn't broken through the 209 yet. It's right around that resistance. And we'll notice here 209, 210 is what we're looking to breach. It's currently in a giant range-bound market right at the resistance period. US 100. So this is where things get a little bit interesting. Obviously, downward trend broken. Which day? This actually broke early. It broke on the 16th of March for technology. So on the 16th of March, we made a huge rally sign. Obviously, the 17th and some other markets. It was pretty crazy. We broke through for the first time all of these downtrend kind of indicators, especially things like this 20 moving average. Since that point, we've looked for declines. We haven't quite seen it. This was the best we got the other day, which was barely a decline, just came back to that 14.2 level, and it breached through on the last session. So I said before, we were live. You can go back and watch the live just near the close, and this is what we saw. So let's now take a look at what we actually saw happening in the market morning. So the market broke through this area here, 14,450. Now, if we bring that onto a chart, what do you see? Okay, big resistance, yeah? 1, 2, 3, 4 touches. A pullback in the futures market, then the market explodes out, reverses, scaring probably a few people in the morning, and creates basically a form of a tweezer bottom. We get 2 rejections off that point with the follow through. At this point, it's very difficult to be short if you're a scalper or day trader. You see this, it's highly likely to be successful, and it's a fairly replicatable pattern when you understand TA and you understand the way that dynamics work in the hour of the retail trader. The trap was set, and that's one of the ways that you can certainly figure out traps. If you're interested in knowing more about this, I'd suggest you do our private mentoring course. I go into it in great detail and I break down all of these strategies and all of these concepts. But look, it was there. You can go back, watch the live stream. I was almost willing the market on. And when it blew through this point, of course, it was going to be quite a nice rally. That's what ended up happening. Now, can you tell that on a daily video? Unfortunately, you can't. And that's why this market is fast and nimble. We know that for now, all the signals are saying bullish. Any pullback could be met by buyer demand. That's actually what the market's telling us, even though it may seem irrational, even though it may go against all of your greater judgments. Sometimes I always say, the more fear that you have, especially the people around you have, the better the opportunity. You know what I mean? It tends to be fairly true. A lot of great traders actually trade off that concept, and they trade off capitulation style trades. They can be difficult, but yes, sometimes when everybody else is thinking another thing, it comes back to that old Warren Buffett saying. So for now, it looks bullish. Where are some of the big key resistances? Well, look, we have a massive resistance sitting around the 46. You would think the 45 might have acted more as a resistance, but it's not really comprehensive that it is. I mean, 45 could be. Where do we now think the market could go? I mean, it may just go down to 44. That could be all there is before a bullish rally. But 46 seems to be the target that the market's looking for at this stage. You could really see it getting towards here. Big resistances back in the February period. That will probably be a big zone for it. So over the next 24 hours, what you're going to be needing to do is break down the market to really looking at exactly what's going on. We've got this tight range near the close of the day. If it breaches the tight range and you see something similar to the other day, then we move towards the 46, you would think. And if it breaches the tight range towards the downside, let's say it was still stuck around this, where do we think we go? Well, there's a good chance we try to push back down to that 44 or somewhere around there before we buy again. So there's just that free kind of space area that I think you're going to have to be very nimble on at this current market. Are we afraid of the longs? I wouldn't say so at this stage. From a TA perspective, it still looks pretty strong. We haven't seen signals towards the short side just yet. There's a lot of macro stuff. There's a lot of scary things, but it's not showing it to us. Bitcoin, how's that going? Well, Bitcoin had a little bit of a breakout. It's trying to get above this weekly 2050. You can see here, Big issue for it. Obviously, we know 45,000, 46,000. We've talked it to death about how important it is. Let's take a look at the daily. So the daily is getting ready to try to break out here. I think it's actually looking relatively strong. Obviously, 37 is the huge support level. 44 to 45 is the huge resistance level, but it's making a little bit of a series of higher lows. It's going for the resistance as we speak. And if we bring in something like BTC shorts, so we'll do that now together. Let's bring in BTC shorts. What's going on there? Well, it's dropping a lot. BTC shorts was very high on the 11th of March, but all of those shorters, all the big whales have said, you know what? I'm kind of happy to own Bitcoin at the moment. So they're pushing it through. Ethereum is another one that's looking like it wants to break out. Obviously a series of lower peaks. We've had some nice consolidation here. I'd always like it when you have a rejection week met by some kind of buyer demand that closes above. So could this break out? Yeah, I mean, Ethereum still looks good as well on the charts. Where does it go to? You would think it tries to go towards that 33, 34 zone. And of course, Bitcoin might try to go and test 44, 45 again. So these are just some quick levels here. If you haven't already, come and follow us over on Twitter. We post a whole bunch of things. And of course, remember to check out the calendar as well. What have we got coming up? We've got Wednesday here. Fed Chair Powell speaks 8 a.m. Oh, so much fun. Who knows what he's going to do to the market? I don't think he'll say anything in particular that's amazing, but whatever he says, the market is just going to do what it feels like regardless of the time. So for now, it still remains bullish here. Yes, we may get pullbacks. There looks to be buyer demand at this stage. It is irrational, but it could definitely hold up based on the stats. Based on the stats, March into April might be better than we expect. And that's just the reality of the stats, of the information, of the time we're in, and the irrationality of these markets. Make sure you subscribe, smash that like button if you enjoyed it. We'll see you in the next one. Bye for now.